global economic data has been better than expected, especially in the industrial manufacturing sector. This is also true for China and Europe, as countries have continued to reopen from the lockdowns. News on the virus have been mixed, as cases worldwide continue to pick up, but the good news is that both hospitalizations and death continue to trend lower. Also, the news on the vaccine fronts are even better than we anticipated. And now we expect a proper vaccine by year-end for a significant number of people. The markets have rallied hard, and now it's time to see what to invest in. We are driving without GPS, as not many companies have issued guidance. We still believe it's time to invest in growth in the US, in technology and biotech. Why? Because growth technology companies in the US are also the ones that generated high free cash flow yield, something that normally doesn't happen. In Europe it's different. The rescue fund was approved, and for the first time Europe is investable. We want to invest in cyclical companies that will benefit from that green Marshall Plan put in place and leverage us in case the economy has a double dip, and leverage cyclical domestic European companies. We also want to invest in unregulated industries versus regulated industries, as who pays for the bill will be one of the key answers that we need to respond. And in some places, regulated industries, unfortunately, will be part of that. In fixed income, we've been investing in high-quality bonds. Now we want to take a bit more risk and also invest in selective falling angels that will benefit from central banks actively buying those bonds too. Volatility, unfortunately, is going to be here, and there's uncertainty ahead of us, especially in two fronts. One is the US election and the potential risk if the tax cuts that Trump implemented are reversed by a Biden presidency. The second one, and probably the most worrying, is that relationship between China and US, in where we see the continued decoupling of that relationship. How to play it? Well, we continue to favor gold, but we've also talked at the start of the year of the end of the King Kong dollar. So we favor defensive currency, but also the euro in this environment. Finally, volatility is high across the board. So the place to play that volatility in our clients' favor probably is in emerging market currency, where that volatility is not as high as historically. And that will allow us to navigate the turbulence that can come ahead of us as we trade on a side market for the next coming months ahead of us.